Hello and welcome to another video for Diary of a Trader. We're going to go over how to identify the conditions that can be met for a market bottom, or how to identify if there's going to be a low met. And for the purposes of this video, we'll be looking at the current chart of Ethereum. Now it is 6:09 a.m. Central Time, and it is the 14th of June in 2018. And as we're looking at the chart here, we can see this is the hourly. Let's look at the daily. And this is in cryptocurrencies. This is Ethereum, and Ethereum is the second most valuable and arguably the second most important cryptocurrency after Bitcoin. And we can see though that over the last 8 days or so that we have had some significant decrease in the price action. Now, the question comes to, well, if something is falling or rising at such a large rate, how do you determine whether that is going to continue or whether it's going to end? And what we're looking at here is this market geometry. This is a Gann. This tool is called a Gann box, but it can be used to construct a series, any number of Gann squares, like his Gann square of 90. That's what this one represents. And so we look at the square of 144 rather. So if we look at the chart here, we can see that price, whenever it falls through one of these angles, the ones that travel from the bottom to the top, we can see that we see a falling and an acceleration in the movement of price. However, when we approached this angle here, we stopped. We actually found a lot of support, and now we want to know why. Why was there a lot of support bought, and how do we identify that support? Well, if we look at, for instance, the entire price activity, let me fix this here. Oh, I gotta unlock that. There we go. Oops. If we look at the level that we're at, we like to look at some other conditions from the past that would help us analyze why this may have been a stopping point. So this line here, this thin blue line, is the 786 Fibonacci retracement, and that's from the most recent swing low and swing high on the 1st of May down here, all the way up to, the 1st of April all the way to the 6th of May. All right. And so that's where that Fibonacci was drawn. And so the area that we stopped at yesterday, the price level is right on that 786 retracement. And that is shared by the fib level that starts from the initial swing low of the breakout of Ethereum to the all-time high. So that is the same zone we're finding. And actually, as we're looking at the volume profile here on the right, another reason why we may have found a bottom is that this is a high volume node that we're at. We're trading in a significant amount of volume in the volume profile, right? This is actually the second largest volume node zone after what has been traded down here, which accounts for the very beginning of Ethereum's major accumulation phase. And so that's where we're sitting right now at that 480. But if we bring it down to the hourly, on a shorter time frame like the hourly, what do we see? We see large volume bars coming in that are actually buying volume. So this is a clear sign that we have participants coming in to buy up at these lower prices, and certainly to support price from moving lower. We have an inverse head and shoulders set up here. That's a strong reversal pattern. We could draw that just like this. All right, inverse head and shoulders pattern, and we have what you would probably call a bull flag right here, where the projected idea is that as we approach this angle here, we will respond to it as a support zone and we should move higher. All right, but another indication that we have reached this bottom is all these multiple time frames. So let's look at the daily. on the daily, we have the following conditions. The composite index is in a low. All right, we're actually in a very natural support zone where we often see prices bounce if we scroll all the way out. And so we're at a natural low zone in Ethereum. And the fact that we are below both of the averages here indicates that we are in a buying condition. So the minute we start to slope up means that we are in a buying condition if we're below these two moving averages. Also, look at the Stochastic Rsi. What value is this at? We are all the way down in oversold territory. And if we look here, we see that the fast moving stochastic is sloping up, which indicates that we will be moving higher. So we have all of that going for us. Then if we look at the weekly, what do we have? Well, we finally are below the moving averages in the weekly, and we're approaching a zone that may or may not be a support zone in the composite index. But if we do start to still do start to move higher, the fact that we are below these moving averages is supportive for buying. And if we look at the Stochastic Rsi as well, we are in neutral territory, still pointing down, but we are still indicating that we have conditions for moving higher. When you're looking at weekly charts and we've been in a overall long-term bull trend, then things that are around the 50% level, the 50 value area in the Stochastic Rsi or in any fast-moving oscillator, those can turn into be support zones for buying. So we are still within that value area. And then if we look at the monthly finally, we can see that we have very supportive buying conditions on the monthly. And this actually will look a little silly because if you think about it, Ethereum is not old, is not new compared to if we look at a Forex pair or a regular equity market or the S&P 500 ETF. We don't have a lot of history to go by on the monthly, but the values are still here. So when they finally meet the conditions for being painted out an oscillator, we can see that we have a low in the composite index being met, followed by a higher low, but we have a lower low in price. So this is in effect natural divergence on the monthly chart, followed by the conditions that we have extended oversold conditions in the monthly chart. Now, any monthly chart that has extended oversold or overbought conditions, it does not stay there very long. It does not stay in here. It responds very violently and very reactively out. So we should expect to see a large responsive price move higher to get out of this zone based on the monthly. And so if we just look at all of these conditions where we have a bit of a downtrend going forward since the beginning of the year, we look at the current price action where it was halted on this angle. In addition to the shared, we have two equal Fibonacci value areas on a shorter and a long-term swing range. And in addition to the extended conditions in these oscillators on the daily, weekly, and monthly charts, we have a very high probability that this is a market bottom. Oh, and in addition to the high volume node that we see here at the current value area. All right, and so this will be fun to look at as you see this video. If we were to look at it again in about 6 months, closer to December or January of 2019, it'll be interesting to see if this scenario where we have these conditions being met for a bottoming in price, where we could see prices move higher from this area, and this could certainly be a market bottom. Thank you for watching this video. I look forward to talking with you in our next video. Bye-bye.